In the short term, the rally of the US dollar may be fostered by positive economic indicators. So, currently, traders are bullish on the greenback. The situation in Australia is the opposite. The Aussie is declining amid the weak performance of the economy. Watch our video review and find out more interesting highlights from the Asian session. Yesterday's Asian session ended not so well for the US dollar index. It lost several pips and fell to the level of 93.00. The greenback kicked off today's trading at this level. The reason for this temporary correction was the negative reading of the US pending home sales index in the real estate market for February. It decreased by more than 10%. Besides, the ADP Nonfarm Employment Change results for March were also disappointing. Nevertheless, the bullish forecast for the US dollar remained unchanged. The US currency managed to reach a one-year high against the yen and hit multi-month peaks against other major currencies on Wednesday. At the same time, investors are waiting for more comments about a new stimulus bill. Additionally, they believe that mass vaccination will help the United States boost the global recovery from the pandemic. For this reason, today the US dollar index is likely to trade above the level of 93.10 and 93.20 with the possible short-term changes. Yesterday, the dollar-yen pair did consolidate above the level of 110.37. On the chart, we can see its attempts to rise higher, but the signs of forming divergence prevent it. As we noted in yesterday's review, divergence could form when the pair reached the level of 111.39 and even at 112.60 in case of robust growth. Yet the divergence may not form at all. On a larger time frame, the pair seems to have firmly consolidated above the current level of 110.37. Under the positive scenario, a visually weak divergence may disappear and the pair will move to the nearest target level of 111.39, the minimum of October 2018. Yet it's recommended to open traders with a lower volume in order to avoid risks. On Wednesday, the Australian dollar touched the level of 0.7641 with the upper shadow of the candlestick and moved down. Today, in the Asian session, it extended losses due to the weak data on the trade balance and retail sales. In February, Australia's trade surplus totaled $7.53 billion against a January of $10.14 billion. Retail sales also declined by 0.8% in February. Even the manufacturing PMI dropped to 56.9. The pair is expected to dip below the target level of 0.7565 and eventually to 0.7500. A firm consolidation below 0.7500 may push the quote to the level of 0.7375, which is the low of December 7th last year, as well as to earlier and stronger historical extremes. And that's all for now. We wish you a profitable deal. See you in our channel with a new video in a couple of hours.